Welcome to another edition of Community Matters. I'm Jim Cameron, your host and the program director here at Darien TV. That's our new name, not TV 79 anymore, Darien TV. We're going to talk today about the real estate market in town, and our guest today is an expert on that, Becky Monroe, who is a real estate agent for over 21 years at Brown Harris Stevens. So, Becky, thank you for joining us on the program.
My pleasure, totally.
Now, in the past, just for perspective, we have had other real estate agents on the program. We've invited many, and they're too busy showing houses or whatever, but Becky has been most gracious in giving up some of her time on a day when she could be out there stimulating the local economy. Becky, tell us a little bit about your background, because I know that before you got into real estate, you were involved in commodities trading. Was that right?
Yes, yes. I started off for 25 years in the international commodity trading business. I worked for a company called Cargill, and I worked with them in New York, and I also worked in London. And when I moved back to the United States to marry my wonderful husband, I went into the petroleum business. And I ran the American company of a Swiss oil group, basically trading in petroleum products with the multinationals. And my main country I worked with was the government of Venezuela. I worked with them for about 17 years on a long-term contract to sell their crude oil and their heating oil. And then when Chavez came in 2000, he canceled my contract. I was not the au courant type of person that he wanted to be working with. And that is when I made a move into real estate.
Well, that's what we want to talk about today, obviously. We can do another whole geopolitical thing about what's going on in oil in Venezuela, but another day. How does the real estate market in Darien look these days? We are recording this program in late October of 2025. It looks like it's still pretty hot. Housing prices in town seem to be going up. Am I wrong?
No, you're absolutely right. The market itself has basically in the last 3 years had a structural change. And that change has been a limit of inventory. It's come about for probably four main reasons. The first is that the major shift was the baby boomers. They basically stopped moving. And they stopped moving for a couple of reasons. One was that their alternative, which used to be selling your house at a nice high price and buying something inexpensive in Florida, was the traditional option or the Cape or whatever. COVID changed all that by bringing the value of those markets very close to the Darien values. Therefore, they didn't have the large kind of nest egg that they would get selling the house here and moving somewhere else. This limited then their alternatives. Also, we've had a lot of the millennials, which are at their peak buying time frame, moving into town. And a lot of them are children of people who live here. So they decided they would stay. They also have a lot of them either very limited mortgage or their mortgage rates are very low. So their advantage of trading the house for something else has become less interesting. The idea of selling and then deciding to rent has not also come really to the forefront because the rental prices are up 23%. So the average rent now in Darien is about $7,700 a month. And this restricts their options. A lot of them are happier just to stay in their homes. This has affected the overall market because they were the traditional suppliers of the houses that the millennials would traditionally come in and buy. This has put us into a market where not only with them, but with the investors coming in, because they see the properties as good investments because they can rent them at such a high price. And because in 2008, when the market crashed, the builders stopped building. A number of them struggled, and the idea of building just didn't sit. So we have a lack of new inventory also coming on the market. So that combination has put us today with an actual inventory that's available for people to buy as of the end of September, 32 houses.
That's 32 houses on the market in Darien.
In Darien. And how does that stack up against history? Between 2016 and 2020, we would have had 210 houses on the market. Wow. So our inventory is 15% of what it traditionally is.
Are there any what we used to call starter houses still available in Darien? And what's the price on a starter house?
The major shift has been, because of the demand, pushing most of the market above $1 million. The starter homes where we had been, you could be anywhere in the 600s to 800s, are no longer available. The problem is compounded because the traditional person that would have sold that and traded up to a $1.2 or $1.4 million house, there's very limited supply of that product too. So we don't have the available inventory for people coming in at the starter home, traditional starter home level. The starter home level would be closer to probably between $1 million and $1.5 million.
So, I guess we all look at the real estate announcements and what's on the market and what closing prices are, and occasionally we'll sneak a peek at our own property on Trulia or Zillow. Mm-hmm. Kind of, envious of, oh, I can't believe the prices are so high. But you're saying it's kind of difficult to cash in your house, even if you have all that equity and your mortgage has been paid off, because there's not many places to go. If you like living up here, you might as well just stay put, right?
Well, and as I said, because the alternatives are not really lots of them. One of the good parts that has happened in town over the last 2 years is that we're bringing on new inventory through our building. Probably we'll have between 260 to 280 new units between 1 and 2 bedrooms.
But we're talking rental in those cases, right?
Rental, yes.
So we're talking the Corbin District, Heights Crossing,
Parklands,
the new Trammell Crow development in Thorndale Circle as well too.
Yes,
but those are all going to be rentals, and if my nest egg isn't huge, and I'm looking at $7,000 a month in rent, there's not going to be much left to give the kids in an inheritance if I start drawing it down, right?
Yeah, exactly. And we also have, when you look at who's moving into town, we traditionally get a big wave from the New York City group. But we are also getting Westchester. And Westchester is coming in because their tax level is so high. We have, where we used to have the traditional trade-up market, the trade-up market, we had 3 levels of markets in Darien, which was the starter home, second home, the final home. It's very difficult now to make those leaps because we have this gap of the middle home that you can move to. And for most people who are of the baby boomer group, their options are either to be looking at renting, or there still are a lot of opportunities outside of Darien in the Stamford or Norwalk area. As an example, there were over 600 apartments sold in Stamford last year, between, in the 400s and 500s for about 1,100 square feet. The question is, do people want to leave the town to move to those areas, which they can. So there still are options. And that's what more people are starting to do, especially in the nice areas of Stamford down by the water in the harbor area. Norwalk, all these markets have come up in price too.
We're
And
talking with, I'm sorry, I've got to keep things moving here. Becky
yeah,
Monroe, our guest today on the program. She is a real estate agent for Brown Harris Stevens here in Darien. So let's say I've decided I want to sell my house. Uh, let's walk through the process from the seller's point of view. The first question you probably get a lot is, should I do a FSBO, a for sale by owner? Can I sell my house by myself, or easy question, should I go to a professional real estate agent such
mm,
as yourself? And if so, how do I choose the right one?
right. Choosing is more of an interesting question, but FSBOs, as we refer to them, had been a trend in the late 2016 through 2019. The market has really been in real estate flat since 2001. It popped up and then got slammed and never really came back until COVID. Um, FSBOs could then easily go on the market back in the older days. Now we have 90% of everyone going the traditional route with an agent because homes are selling so quickly, and the necessity of preparing them brings in the expertise of the agent more than ever before, especially if they have experience.
So what's the
I
agent
yeah.
bring? You mentioned expertise. If I was talking, or let's say I was interviewing you as a potential agent representing my house to sell, what are you going to make for me that I couldn't do for myself?
The most important thing I think is you sit down and you go through, you actually need to listen to the person. Often we give advice before listening. What is their objective? Are they going to be leaving town? Are they looking to downsize? What is their objective? And then you go through the finances of it. To come on the market with a as is property is the worst move you can make. The people that are buying today do not want to do a lot of work on a house, and they will pay a premium for a home that is in good condition and has been basically fixed up. We bring to that the options for the seller, depending on how they want to finance, what their finances are, whether it be painting, fixing it up, new landscaping, and then the ultimate, which would be restaging their house for today's market.
Well, let's talk about those one at a time. So, if I'm interviewing you, you'll come to my house and you'll say, Becky, I have decided to sell. And you're going to look around my house and give me some tough love feedback on this room needs to be changed. There's too much clutter in here. The landscaping, just doesn't work anymore, Jim. You're going to give me some advice on what I have to do to make my house more saleable. Is that fair?
If you want. And what we do is I give options. There are options that are on it can be a very long line of how far they want to go. Sometimes people don't have the cash to do any kind of a major fix up. There are companies involved, I mean, like our company, where we work with a group that helps finance the seller, should they want, and help pay for the fixing up, which gets returned to them on the sale. So often you don't have to have a situation where you're out, thousands and thousands of dollars trying to fix your house up, depending on what your goal is.
Hmm.
You can go through different opportunities that way. But I think the main thing is to show them the statistics of what the return on their investment is. It's easy to say, do these things, but there are really very strong statistics on the condition of a house, how fast it sells, how many offers you will get because of how you look.
So
And
you talk a lot with the buyers. What are buyers looking for in a ready to move in house? Is it granite countertops in the kitchen? Is it fresh coat of paint? Is it What do the buyers want that you can then explain to the potential seller? This is going to be worth your time and investment.
Well, it depends also on the price level of the house you're coming in with, obviously. Very rarely will I encourage somebody to redo a kitchen because that is a big price point. There are easy ways to do a kitchen and make it look really nice. We're doing a lot of painting of original cabinets these days, saving the cost of having to redo all the cupboards. Um, Believe it or not, some of the new countertops are quite reasonable. Those are easy to be reinstalled and to make a big difference. But you can upgrade your kitchen to look fresh and nice. It does not have to be a star kitchen. Bathrooms, those two also are things that you focus on. These are not big ticket items to fix up. Paint goes a really long way. One thing we do encourage our sellers to do before they do anything is we'll often bring in a building inspector to go through their home, look at it, and say, now these are going to potentially be major problems for you. If you have very old appliances, if you have very old furnaces, air conditioning units, you can look at, will that cause a problem for the net return? Because the buyer comes in, and the biggest mistake with buyers is they usually price the cost to fix something twice as much as it really is going to cost them because they're not experienced in what you can and have available. We work with the sellers with numerous different potential contractors that can help them, and they can decide who they want to work with, do they want to work with them, and how far they want to go. On the
Now, do you ever
minimum,
have the, go ahead, I'm sorry.
no, on the minimum, we do encourage them to paint the house on the interior and sometimes on the exterior because that makes a huge difference.
You've probably driven people around looking at houses and you pull up to the front of the house and they look at it without ever getting into the house itself and they'll go, nah.
That
It's
happened
no curb appeal.
that happened a lot more before we've had so much pressure on markets, but it definitely affects the price,
Right.
you know,
Now, what
and
about the awkward conversation? And you probably have this with people about, I think your house is a tear down. I know you love this house. You've spent many years here and you've done a great job of keeping it up. There's challenges, but it's a beautiful piece of land and someone could come in and put up a bigger house, just, de novo, and it would be ideal for them. Is that a hard conversation to have with people? You're a tear down?
well, I have never had that conversation. I believe that is the worst thing you can say to a seller. First of all,
It's insulting, right?
well, no,
In a
it's
way.
not insulting. It costs you money. The word tear down itself drops the value of the property without anybody even seeing it. So with my clients, we never look at a tear down. The only advantage, there is actually no advantage to that statement. You're always better off fixing your house to a standard where a family wants to buy it. You don't want to, you traditionally, and my builders will hate me for this, but traditionally builders will pay you the least amount of money for your property because a family is just happy to get in and get their kids into school, and they will see longer term what they can do to fix it up. That's the conversation I have with them about never ever presenting a teardown.
Now, you also use the phrase staging. What does staging a house mean?
Well, staging has come a long way. It really started in the 90s when brokers ourselves would bring in, furniture, things we thought looked better. It's always important to declutter or remove furniture. Declutter sounds like a bad word, but half is always better than 100%. So whatever goes out is going to help you.
So
Um,
an empty house is easier to sell than one that has existing furnishings, etc.
Depending on what your furnishings are, but I never want to sell an empty house because the problem also with our younger buyers, they don't have much vision. When they walk into a house, they can't necessarily imagine what it's going to look like when they have their furniture in. So a minimal amount of staging is necessary. And we have found that the return on staging, which is you remove basically all of your own furniture, because you're going to have to make decisions on what you're going to do with it then, which is also part of our process. We work with them on auctions, on what their alternatives are, what do they want to keep, where can they store it, how much is that going to cost them. But assuming you're getting a blank house, you start then with the painting. You deal with wood rot because that is a major key to the younger buyers because they don't understand it. And then you do staging. Staging costs anywhere from a minimal in the 6,000 and 7,000s, and it can go up into the 30,000s, depending on what you're doing.
And that's basically renting beautiful furniture to make your house look much more gorgeous than it ever did when you lived in it, just to help
Yes,
deal with the lack of imagination of the buyers, right?
and it's very important because when I look at my net back on homes that we've sold, we always get a minimum of two times what we put into the house out of it by doing it. Often it can be much more extreme because it encourages multiple people coming in. Your goal is never having just one buyer, which is why there has been a trend recently by certain companies to ask the sellers to keep their houses off the market and bring it in only to their company to show, which limits 90% of the possible buying market, which I'm very much against that. The more exposure you have of your property, the higher your price is going to be. The more
Becky
limited.
Monroe, I'm sorry, we got to keep rolling here. Becky Monroe, our guest on Community Matters today, and she is a local real estate agent. We're talking about how to sell your house if that's
Yes.
a choice that you really want to make. So let's say I'm working with a real estate agent, you or somebody else. Does the real estate agent I work with get an exclusive on my property, or am I going to be on that multiple listing service, the MLS? So a lot
You
of potential real estate agents and buyers will see it.
you always want to be on the MLS. There's no question. You're the Because if you don't, you are limiting your buyer pool. And your buyer pool is the one that's going to generate you the best value. Plus, if you're an exclusive and you're kept within one company, like with Brown Harris, we have a very strong Hamptons market, very strong New York City market, New Jersey market, Florida market. And all of these people will be exposed to the house where you wouldn't have that otherwise. And that
Hmm.
is crucial to the success of a really good sale.
So I'm on the multiple listing service, and let's say I have not decided to move out or stage, but we're going to start showing the house. That's always a little anxiety producing. I guess when you're showing a house to potential buyers, you don't want the owner there. Is that fair?
Yes, that's
Why
fair.
is that? Why can't I be there to answer questions when people want to buy my house?
You don't know what kind of question you're going to be asked. And it's also kind of scary if you give a very strange answer. So we are trained in dealing with the buyer. We know what to emphasize and what not to be bringing attention to. Some agents make mistakes when they take somebody into a kitchen and the first thing they say to the buyer is, well, we can get rid of that old dishwasher. Don't worry about that. They might not have even thought it was an old dishwasher.
Right.
So the value of the agent, and as an experienced agent, I've sold over 300 homes in Darien, is to know, to say the least, when you're representing the seller, and to answer the questions of the buyer, but to point out the highlights. Where are you? What's your location? One thing you can change is a house. You cannot change the location, and staging is so important because your first literally 5 minutes of them coming through your front door is going to make a decision whether they're going to buy this house or not.
Now, for all of these services that you're talking about as the real estate agent, advising me, giving me your professional experience, having sold 300 homes in Darien, how much commission do I pay you?
Well, there's been a change in the marketplace for this. Traditionally, the old market was, let's say, we can't fix commissions, but let's say on average, they were running around 5%. That would mean the seller would pay half of that to the selling agent and half of that to the buying agent to basically encourage the buying agent to be bringing somebody into the house. Today, the seller has that choice. They can pay half of what they traditionally would have at the 5% and just do the 2.5 to the selling broker. And the buyer's agent then has to get the commission from the buyer. This was presented. This is what they tried to do in the market. We have not really seen that happen because the traditional way of the seller still covering, they do not pay the agent directly, they pay basically a credit to the buyer, has still been the best move. Often buyers don't have the ability to come up with the 20% down and also pay the agent. So when you present your offer to your seller, you present it as if they are going to cover that commission, and the seller then can decide whether they're going to do that or not.
So when you're setting an asking price for the property, what's the psychology? I mean, you know what the comparable properties have been selling for. Do you price it low and hope for a bidding war, or do you price it realistically? And I see from your weekly real estate reports that there are properties that have been on the market and they've actually lowered the price. I mean, are we seeing the bidding wars that we heard about where everything is selling for much more than the asking price, or has that ship sailed?
Well, in the beginning of the year and for the last 9 months, the average price is around 107% over what the sellers are coming on the market with.
Mm.
It's moved up. This is the highest we've ever had in history. There
Is that just
was
because of demand?
totally because of demand and lack of supply. The in the beginning of the year, there was a tendency to price slightly lower to encourage as many buyers to come in as possible. You want as many foot traffic people in. Then we would see substantial offers over and multiple bids. That has changed a bit. People have become more kind of realistic in saying, this is really a price that I'm going to be quite happy with if I achieve it. It's still very competitive against the rest of the market. And I would prefer to go and do that on slightly lower side than what the rest of the market may be, just so I get the traffic in. But the days of coming on 10% below the market value, I do not see anymore.
So we're recording this program in late October of 2025. The winter is usually not a busy time for real estate. It's usually the spring and maybe the summer because folks want to get their kids in the school system. Is that true? But you're not exactly, taking off and jetting around the world on vacation for 3 months. You're still selling properties.
The major shift we've seen is there no longer is seasonality. We don't have a seasonality market anymore. And that is due to, in many ways, a lack of the inventory. We still have the traditional highest markets of bringing your house on as a seller. the February and March timeframe. I always encourage my people to really be ready to hit the market running by the end of January. That does feed in to the families who would like to be here by the summer. It also feeds into when the bonuses are reported on Wall Street and people know what their finances are. So especially if you're in the higher price points, you want to see yourself get into that market. Waterfront, you can bring on any time of the year. It really doesn't matter. I sold one up on Long Neck in August, and it sold in 20 days. This also is a function of what you decide when you approach your seller. How do we want to go on the market? When do we want to go on the market? And what are you prepared to do?
And how long is, properly priced, how long is a house sitting on the market these days before you
What
start getting bids and then before you find one you like?
the average has actually come down in 2016 and 17. It was about 70 days. We are now down to 13.
13 days from the time you first listed.
Yes.
That's a frenetic pace.
It is a very frenetic pace. Man, I just went through one myself. It's a little gut wrenching if you're representing the buyer. But the thing is, you want to, once you have an accepted offer, you want to perform quickly. So normally what happens is you get your accepted offer, you get your building inspector in as fast as possible. Usually we try to do it within 2 to 3 days.
That's with the buyer bringing in their inspector, right?
They're bringing in their inspector. During that time frame, the attorneys are drawing up the contract. As soon as you've done your inspection, you then decide if there's any issues that are worth discussing with the seller. And you hope to go to contract then once you've resolved this within 7 to 10 days. So the whole time frame has become very small. And it really is, you do not own that house until you have a signed contract, fully executed, and have transferred your 20%. In the
But when
old
you put,
days, you could
go ahead.
draw it out, but you can't anymore.
But when you put that deposit down, then you have to go to closing. And I assume that people who are buying in this market have financing already arranged, or are they going to have to go out and shop for a mortgage after they've decided where they want to move and what the price is going to be?
Well, we don't, if I'm representing a seller, we don't actually go into any kind of agreement until we know. Let's put it this way. What has changed is the market above $3 million, 60% of that market now, people are buying in cash. So they will get their own financing, but it is not a condition of the purchase. This increases when you get into the $5 million range, where 85% of all the deals are being done in cash.
They're sitting on
Therefore,
that much cash?
so a lot of them are, well, let's put it this way. The deal is stated as cash so that there is no responsibility to the seller to have to wait.
Right,
Usually the people are still getting mortgages, but they are taking that risk.
right, right.
They take that risk because you want to have, as a buyer, the least amount of contingencies going into the offer that you're going to present to the seller.
But nobody's coming in offering to pay in Bitcoin or anything like that, are they?
I haven't seen that. That I have not seen. I think
Okay.
that would get a little confusing. That's, but I wouldn't be surprised. I wouldn't be surprised because we are having more investors coming in to look at the market. So it may be structured differently. When you present your offer, you try and keep your contingencies as low as possible. You try and put
What's a
in that
contingency?
your contingency would be often you ask to do the building inspection, because when I work with my buyers, I feel very strongly that they should do a building inspection so they know what they're buying. People have been waiving that. I don't recommend that. It can make it harder because some people will waive everything, but financing contingencies and building inspections still are happening in the lower price points. Financing contingencies in the higher price points are occurring less and less.
I mean, would a bank issue a mortgage on a house that had not been inspected by the potential buyer? That's pretty risky, isn't it? On the bank's part.
Well, the banks have their own criteria, so they will stipulate what they need to know. One of the things that has been coming up recently, it hasn't hit Darien as much as other areas, is the age of a roof.
Hmm.
Where it didn't really, most roofs, you get a good architectural shingle, you got a 30-year life. So, you come in and, if you're using the cheaper product, maybe it's less. Banks are now asking for roofs to be between 15 and 20 years.
Hmm.
So these are things that you have to take into consideration when you're entering into a purchase agreement.
And
You
what are
know,
mortgage rates like these days?
well, I would say the main ones we've been seeing recently on the 30-year is 6.27 for the 30 years. It has come down. The jumbos are even a little bit more aggressive.
What's a jumbo?
The jumbo is when you get above $1 million mortgage, because the traditional mortgage cutoff used to be about $1 million, as related to Fannie Mae and everything else.
Right.
So that's the different kind of setup you can have.
We have to wrap this up, but before we leave, is there anything else that you want to give in the way of wise advice to a potential seller of their property in Darien? Aside from, call my office. We'll put your
Um,
contact information at the end in case any people want to.
the main thing I would say is that if you are looking at different agents, make sure you're dealing with an experienced agent, someone who has had a good track record and experience, someone who is going to get you the highest price by exposing you on the MLS to the biggest group of people, you know, and what is your objective in moving? In other words, are you going to be leaving town? Are you going to be downsizing? And does financially it all work? But I would say there are no more FSBOs going on, because it only hurts people that are selling. They don't know
Right.
what they're doing. And right now, our biggest asset is being able to assess what your buyers are telling you. Are they realistic? Are they going to perform? Are you going to find you get into trouble? This is the kind of conversation which should be quite a long conversation before you decide who you're going to work with.
Becky Monroe, our guest on the program today, she is with Brown Harris Stevens. She is a real estate agent who has been in the market for many years, and we are very grateful for all of your experience and advice that you bring to the program today. Thank you very much for being with us.
Well, it is a pleasure. This is the highlight of my life, because I really love what I do, and I have wonderful experience with my clients longer term, and many of them have become friends. So to me, it's an exciting and a very good world, and Darien is only going to go up.
Well, thank you. On that cheerful, optimistic note, thank you again, Becky, for joining us.
Oh, my pleasure, Jim. Thank you for having me.
Right. And thank you, our faithful viewers, for watching another edition of Community Matters.